So anybody who is paying rent to their landlord well within this prescribed threshold limits will not be required to do any TDS compliance. Yes, the slab rates are beneficial, but then there are no deductions or exemptions around it. That is not true because for a salaried individual, there is a standard deduction for 75,000. So they should be a little bit careful. Simply by saying that I don't earn income or it's not a right notion.
Budget 2025 has a lot of updates for taxpayers. I'm sure you must have watched multiple videos on it. But in this video, we'll tell you all key updates at one place so that you don't miss out on anything. And you will also find out some lesser known updates from the budget. I'm Aprajita and you are watching Why Not Mint Money podcast. I have with me Mr. Anurag Jain. He is co-founder and partner at ByTheBook Consulting. Welcome, Anurag. So very quickly, if you can tell us the most important query that people have been asking is that 0 to 4 is nil tax. Then how come this 12 lakh thing? So how does this rebate thing work? Very quickly, if you can touch upon this.
Yeah, so what the union budget has proposed this year is they have increased the progressive rate of taxation. So earlier the limits was around 3 lakh. Now they have increased to 4 lakhs.
Right.
But if you remember in the finance minister's speech, she was mentioning that till 12 lakhs, the income will be totally, there will be no tax liability. Now the question is how that works out. So there is a concept of course, you calculate your taxes as per the progressive rate of taxation, which is prescribed by the government for 25-26. And then there is a concept of a rebate, and that rebate is coming under section 87A. So this rebate is not a new section, it was there earlier as well. The last tweak that happened in this rebate for the old regime was in the Finance Act 2019, wherein the limit that was prescribed was if you have an income of 5 lakh rupees, then the tax liability will be 100% exempt to the extent of 12,500.
Yes.
Now, if we talk about the new regime came into picture by the Finance Act 2020. And so this concept of rebate under 87A was introduced for this new regime by the Finance Act 2023, in which the limit which was prescribed was around 7 lakhs of income. If you are having a total taxable income of 7 lakh, then the taxes calculated on that income is 100% exempt to the extent of 25,000 rupees.
Now this is 60,000.
Now that has both the income limits as well as the tax limits has been increased. And now what that particular amended section proposes is that if you have an income of 12 lakh rupees, then your entire 100% tax liability is exempt to the extent of 6 lakh rupees.
Correct.
So that is how the calculation works. And so if you have an income of around 12 lakh rupees, then it will be totally no tax liability will be applicable on
Correct.
such
So
income.
basically people will be filing ITR, and when doing that, then under section 87A, they will get this rebate and they will not have to pay any.
Absolutely. And one more thing that our audience or the people need to keep in mind is that this limit is applicable on your normal income. If you are having income on your special rate income, like your capital gain or any other income which on which the special rates, tax rates applies, then in such a case this concept will not work. And in which case there might be some tax liability applicable on such
So basically, if people have made money from stock market, then special rates, so 12.5% long term and 20% short term. So those will be taxed at those rates.
Absolutely,
it will not get clubbed into your regular income. That is there.
Yeah.
But for example, rental income again is part of, it's not part of special rate. It's part of your regular tax slabs that you have. So rental income you can club with your normal
Absolutely.
salary
Rental
income,
on rental income, the normal slab rates are applicable. So the people who are earning the rental income or interest income or any other income on which the normal slab rates are applicable, then in such a case they can reap advantage of such this benefit.
So this is very important point that you must note of. And now talking about people whose salary increases goes beyond 12 lakh, then they will be in soup. But the concept of marginal relief applies here. So if you can explain this point and also share some figures that beyond which this limit will marginal relief will not be applicable, and then people will get into trouble.
Yeah, so interestingly, this concept of marginal relief was there earlier as well in this section 87A. So what happens is, right now, if I am earning an income of 12 lakh 10,000, then in which case the rebate under 87A doesn't get triggered. Now, what will happen, because just because my income increases by 10,000, my tax liability can be in the range of 60 to 65,000, which again is burdensome on the individual.
Income got increased by 10, but taxes.
Yes, exactly. So how the section 87A reads is that in case your income increases to that extent, then in such a case, at a particular income level, the marginal relief would come into picture. In which case, your tax liability in this particular case, if I'm talking about 12 lakh 10,000, the tax liability will be coming to 10,000 only.
Correct. And when it goes above 12.5 or 12.7 or 12.8, then what happens?
See, as per my calculation, up till 12.7 lakhs, the marginal relief will come into picture. So, if anybody who is having a total taxable income of 12.7, then in such a case, the tax liability will be limited to 70,000 only. Beyond that, the marginal relief benefit doesn't come into play, in which case, whatever is the actual tax liability calculated as per the applicable slab rates, that will be applicable.
Okay, so if somebody is earning 12 lakh today and after appraisal, if their taxable income becomes 12.8, then they'll really be in trouble. They should negotiate hard and maybe get more income, maybe beyond 13 lakh in that sense.
They should keep these concepts or these numbers in mind, because at the time of negotiating with the company, if they are basically negotiating for a lateral hire or that sort of thing, they can basically look at these concepts and understand, and then accordingly negotiate with their employer organization.
Correct. So while before negotiate on the salary aspect with employer, you must talk to your CA and understand these concepts for your own salary income. And now lot of people have this notion that if they don't have to pay any taxes, then no need to file ITR. But when you go to bank to get loan, or when you buy an insurance policies, then these people ask for last few years of ITR. Then they are in soup because they haven't filed those. So what those people can do?
See, there are two aspects to it. One is the benefit of filing the return of income, even if you don't have any taxable income per se. Then in which case the benefits is, of course, it serves as a proof. If you are availing loan from a financial institution or banks, then this serves as a proof of your income thing. But the second important aspect that many people might not be aware about is that simply because you don't have a taxable income, it doesn't mean that you are not required to file your return of income. So in certain categories of individuals who might have deposited more than 1 CR in their current account, or individuals who are traveling abroad and spending more than 2 lakhs, or in case individuals who are even paying electricity bills amounting to more than 1 lakhs, in which case there would be a requirement to file the return of income. And so the relevant income tax returns, which has been formulated by Finance Ministry, it captures all those details. It asks for all these questions whenever a person is filing their return of income. The second important aspect is around people who qualify as resident and ordinary resident. So what the provisions of the income tax has cast upon them is that for these category of individuals as well, even if they don't have a taxable income, they are still required to file their return of income if they have got any assets which are located outside India, if they are signing authority in any bank which is located outside India, if they are a beneficiary, even if they are a beneficiary owner of any asset, then also there would be a requirement to file the return of income. So again, return of income, keep two things in mind. One is, of course, the practical aspect of using it as your proof of income documentation. The second is the mandatory aspect as to what the legislation casts upon you.
Okay, so for example, homemakers who are not earning anything, should they file ITR, or maybe students, should they file ITR?
Not particularly, but if they are having passive sources of income, they might be earning interest income, or they might be coming in one of these categories, then also they need to basically file the return of income. So this is not dependent upon the age category or profile category. Even if you are a housewife, you might be having some money in your bank account, you might be expending it for traveling outside, because your bank account is tagged with your PAN number. So in which case everything is getting monitored by the income tax authorities. And so profiling and all those things are being done. So they should be a little bit careful. Simply by saying that I don't earn income, or It's not a right notion. Rather, they might be having a passive sources of income. They might be having capital gain. Then they should assess all these conditions and see whether there is a requirement for them to file the ITR.
Okay, and now people who haven't filed ITRs and now they want to do that.
Yeah.
So what is the process and how much penalty they may have to
So
pay?
again, there are two things. One is you haven't filed your return of income. Let's if we speak about financial year which has gone by, which is 23-24. So the due date of which was July 31st, 2024. Now, if somebody misses that timeline, then there's a concept of belated return filing, in which case they can still file their return of income by 31st of December 2024.
That is also gone.
The due date of which has lapsed, but which was extended by the CBDT. The second important aspect is the government also introduced a few years back the concept of updated return of income, and this was primarily done with the purpose of basically reducing the litigation in such matters, or even encouraging the individuals to do a suo motu compliance. In which case, what earlier they were can use to do was basically file an updated return of income. This can be done for last 2 financial years, like 24 months was the period. So whatever is your assessment year, from that 24 months, you can still file the return of income. Of course, there were some additional taxes and interest which was required to be paid. So if you are filing your return of income within the period of 12 months from the end of the assessment year, you can upload your updated return, and then the tax liability was around 24, and this was an additional tax liability of around 25%, which was tax plus interest. Now, if they file it within a range of 24 to 48 months, or rather I would say 12 to 24 months, then in which case the tax liability was around 50%. Now, this year what they have done is, again with the view to encourage compliance and to reduce the litigation matters, they have extended this time limit from 24 months to 48 months. And so any person who is filing their return within the range of 24 to 36 months, there is again an incremental liability of 60%. If they are filing it within a period of 36 to 48 months, then there is an incremental liability of 70%.
Okay, so when you say 60%, so whatever their tax liability is, it's 60% and that tax liability.
It will be whatever your income is there, you calculate it will be a flat rate taxation. It is additional taxes which will be applicable.
Okay, so those slab rates will not come into picture. This flat tax rate will be applicable to whatever their tax liability is. Okay, and now there is one update in budget that really made me happy, and we did story together in October, that usually National Savings Scheme. So mostly senior citizens have invested in it, and those schemes had been discontinued, and government told that from 1st October onwards, they won't be paying any interest on those schemes. But when people would withdraw that amount, then that amount would have become taxable. Now government says that those withdrawals are tax exempt. So just explain on this aspect. And
so in fact, National Savings Scheme was quite an old scheme. So the government stopped this scheme, just like they are doing this with the sovereign gold bonds as well. So it was no longer beneficial for the government to pay such huge amount of interest. So they discontinued, or rather told people after a particular date that there was no contributions they were accepting. Now what has happened was they were still paying interest on those contributions, and people were, because the interest amount was very good, so people continued with that scheme. Now effective last year, what happened was around August 28, 2024, there was a notification which said that from particular date there will no longer be any interest which will be paid by the government on such a scheme. In which case the senior citizens, because these were the people who had invested in this particular scheme, they were little flummoxed, because they had no option but rather to withdraw that scheme. But there was a section called section 80 CCA which said that in case you withdraw that amount out of those contributions, then it will be treated as taxable income, and that's why there was a lot of hue and cry about that thing. And I believe there was some official representation also made by people as well as state bodies as well. So I think the finance minister listened to that particular grievance of the people, and so what they have done this year is they are saying that wherever the contributions were made before April 1, 1992, they said, and wherever they have withdrawn that amount, that will not be treated as a taxable income.
Right. And another good news for senior citizens is that now interest income on which TDS gets deducted, now that has been increased from 50,000 to 1 lakh.
Absolutely. Because earlier the limit was 50,000. Now it has been increased almost 100%. So now it is 1 lakh. So what used to happen was, as we are aware that senior citizens do not have that much amount of active income.
Right.
So whenever the TDS was deducted and they didn't used to have overall tax liability used to be nil, they had to file the return of income to claim it as a refund. Now with this measure, any person who is earning interest up to 1 lakh, the TDS will not be deducted by the financial institutions, banks, and in which case there will not be requirement to file the return of income unless until they are fulfilling other conditions as well.
Right. And what are some other TDS benefits?
See, again, for interest only, the TDS rate threshold limit for other individuals besides senior citizens have been increased to 40,000 till 50,000. There have been rationalization or increasing the threshold limit for other TDS sections as well. In particular, if we talk about TDS on rent, so a tenant was required to deduct TDS wherever their annual rent was around 2,40,000. So if it increased beyond that, then there was a requirement to do that TDS compliance. So again, government with the motive to basically ease the compliance, they've increased the threshold limits from 2,40,000 to around 6 lakhs, which is around 50,000 per month. So anybody who is paying rent to their landlord well within this prescribed threshold limits will not be required to do any TDS compliance.
Okay, and now about TCS also, they have increased the limit to 7 to 10.
Yeah.
So, what all people will get benefit out of it?
See, benefits will be for those individuals who used to remit money under the liberalized remittance scheme. In which case, what they have done is they have basically done away with this requirement wherever money is being remitted for education purposes, and for that the loan has been taken from a financial institution.
And lastly, not many people know that new tax regime also offers some deductions.
Yeah.
And so somebody earning more than 12 lakh, they will still be in position to reduce their taxable income below 12 lakh.
Correct.
So if you can share about that.
See, new tax regime is, and before that, I would like to just tell that for the financial year, last financial year when the returns were filed, almost 70%, if I am right, almost in the range of 70 to 75% people opted for new tax regime. So the government is seeing that. The second important point to be seen is in the new tax bill, which will be probably rolling out this week by the finance ministry. We'll also have to go through the fine print and see what are the benefits for salaried individuals in that front. But the other aspect is, or the common notion is that the new tax regimes, yes, the slab rates are beneficial, but then there are no deductions or exemptions around it. That is not true, because for a salaried individual, there is a standard deduction for 75,000, which is applicable only for people who are opting for the new tax regime.
Right.
Also, another important point is that earlier the new tax regime was optional. So, but last year it was made a default regime. So, anybody who doesn't do any optional or doesn't do any sort of like declaration, for them the new tax regime will be the default regime on which the TDS will be deducted by the employer organization. Unless until they decide to opt for the old regime, in which case based upon that declaration, the employer organization will be doing their TDS under section 192. Now, besides the standard deduction, anybody who contributes or their employer rather contributes towards the new pension scheme, then in such a case, those contributions will also not form part of tax liability, provided the employer contribution is to the extent of 10% to 14%. Now, this 10% limit is applicable for old regime, but again last year they increased it from 10% to 14%. So again, this is one more benefit that people should be aware about. And again, the intent of the government is to encourage people to invest in this particular lucrative scheme, pension scheme.
So if somebody is employer, they are contributing 14% of their basic pay to NPS, then those people will be in a position to claim this deduction.
Absolutely.
Reducing it from their taxable income and maybe having it below 12 lakh. That is the
so that is one more planning thing that can be
people
done.
Can do, and a lot of employers have now started offering NPS.
It's a popular scheme, and in fact people are opting for both PF and NPS, and they
Yeah.
are taking benefits of whatever is there
Correct.
available under the legislation.
Right. All right, Anurag, you have shared really great points with us. And if you have any queries for us, you can drop those in comments below. We'll be happy to answer those. Thank you.
Thanks.
Thank you.
Thanks.
Thank you.